Yes. Okay. We're live. Hi, ladies.
Hi, how are
Great to
you?
be here.
Yes, it's awesome. Yes, we have an amazing guest today. Of course, I'm Miri Cordaro,
I'm
and
Carolyn Blossel.
we have Dawn. I can't say Dawn. How do you say your last name?
Dawn Sorois.
Sorois. Okay. Oh my gosh, that's an interesting name. It's really nice. So we have Dawn here with us, and it's kind of like a little bit different. So Caroline and I usually our podcasts mostly we did like financial, such as IUL, insurance, MPI strategies, that we really help people how to grow their wealth and how to protect it. And I thought it would be so neat since we are in real estate too, and it's all kind of intertwined. That's what I love about it. Everything that's money, how we can protect it, how can we grow our business with business credit, with all kind of things. So we thought, I thought, I met Dawn a couple, maybe a month ago, and I think what she's doing is awesome. So I decided to invite her to our podcast today. So we would like to start out, obviously, to ask Dawn to just give us just a rundown, how she get to where she is, what brought her to what she's doing right now, and we can go from there.
Sure, absolutely. Thank you so much, ladies, for inviting me here. I love meeting new people and talking about how I started my journey. So I was a activities director of 20 years at a nursing home. That's
Wow.
That's my history. And, COVID, I had gone out for a little bit. I had foot surgery and just came back. In the industry, it just was not the same. I started a mentorship in February of 2022. So while I was out having foot surgery, I was learning a whole new world, right? I didn't know anything. I thought I had to, have a job for 2 years, tax returns, all the things, and qualify for a traditional loan. So it really opened my eyes to how investors do it, which is completely different.
Yeah, different world.
And so I started in February, and it wasn't until August, my fiance had just said, you've been doing this for quite a while now, so let's do it, And so I had quit my job of 20 years, and I jumped right into it in August, full time. I purchased my first property, my fix and flip property, in October, the end of October. And I had gone to the house about 5 times with this contractor. And he's like, yep, everything's great. He couldn't wait to get going. The ink wasn't even dry on the contract. I called him up. I was so excited. I'm like, let's go. Let's get this fix and flip going. And he's like, I think I'm going to pass. And so
we can both relate. Caroline needs some fix and flip.
5 times though. Like, it wasn't, and he had done work on one of my rentals. So I knew him. I knew of his work, and he did good work. And so I thought this was a great fit. He was getting married in December. And so he thought he shouldn't, take his time up to, he didn't want to commit to something and not be able to finish it and have to stop, have a honeymoon and come back. And so long story short, I was scrambling to find a contractor, had a really amazing conversation with a contractor. I thought things were going to go well. It did not. 2 months down the road, I purchased another fix and flip.
Wow.
Before things started going bad with the contractor, I thought we were good.
You're
Good
brave. Let me tell
deal.
you.
Yeah.
No.
Well, I wanted to just keep that momentum, right? When you start
Mhm.
a fix and flip,
Yeah.
if you, I found uh, getting loans and private money very easily.
Okay. Awesome.
So I thought, I had a good contractor. Why not? Let's just keep the contractors working,
Yeah.
right? They're working, they're happy.
Hmm.
Um, Things started to look bad with the first contractor. The second one was going okay. It was in two different states, or two different cities, same state. But so I had no job, right? Quit my job. Um, I went out and I got a Home Depot, a Lowe's credit card in my business name, but I had not built that business credit, so I used my social to get it.
Yeah.
And so maxing out those cards, buying paint, sheetrock, and you name it, was making those payments on time, but they had high utilization. And so it wasn't until, a few months before I had sold the property, I noticed my credit score going down, and not having a job. That was very important to me, to have that safe space in my personal life, and not have my business ruin what I'm doing in my personal life. And so I really had to take a pause. I sold those two properties, thankfully, and everything was great. Paid off those cards, made my credit score go back up, but I didn't want to make that same mistake. And so I really took the time to figure out what I did wrong. And it was not building my business credit. And so I found this amazing company, and they have a step-by-step system. You sign up one time, it's a lifetime access
Mm.
to all types of 0% interest credit cards in your business name, lines of credit in your business name, all the fix and flip, the DSCR, ground up construction, all those things. And so building that business credit profile allowed me to scale my business financially and not have it ruin my personal
Mhm.
credit
Mhm.
score. So that was super important to me. And it wasn't until, I had gone through that I realized there was a lot of other investors out there that had no idea.
Mhm.
And so I started helping people build their business credit. And it was investors coming to me that had 5 to 10 different flips or properties, and their credit score was just really bad because they were not building their business credit.
Mhm.
And so I bought into the company. I was very fortunate to have that opportunity. So now I have my own company, Ground Up Solutions, where we help people build business credit, because it is, I feel, the most important first step.
All right, let's stop here.
Yeah.
Yeah, we're going ahead of us. Yeah, but good. So you started in real estate. You kind of did fix and flip. I mean, it's good things. It worked out. I know Caroline can probably say one word or two about fix and flip. We all of us did here fix and
Yeah.
flip. And I did you ever use credit? Business credit, Caroline?
Did use business credit. Yeah. Yes. But yes. And I was thinking, uh, it was through our real estate community that we were a part of that I learned about the difference between the two. But it is true that most people don't realize that there are two different kinds of credit, and they don't have to be related.
Mm-hmm. No, you're absolutely right. And I must admit, we actually, when we started, Alan was starting working on it. I don't know what happened in the middle. I really don't, because we actually paid for a program, I think through Renata's, that they offer that. But I don't know what happened. I honestly do not. And that kind of really hurt us big time. But
Yeah,
well,
so Dawn, yeah, continue telling us, like, so you discovered that there was a difference between the two, and that led you to exploring more of what that difference is, which led you, if I understand correctly, which led you to, I need to be an advocate for these investors on how important this differentiation between the two is and where to get started with establishing your business credit. So why don't you start there with new investors, or even investors that have been in it for a little while? I'm sure they've come across this issue, but what's the first clue that you're not doing it the right way? I think you mentioned it, of noticing your credit score being affected by your utilization of credit cards.
Yeah. So your personal credit is not supposed to hold up your business. You're supposed to separate those two. And there are a lot of people that are doing the things, and they're doing them very well. And they're able to scale so much faster because they have that business credit profile, and they're able to get, close to $500,000, if not more, of lines of credit, business credit, to really scale their business. And then you have on the other side, when I had joined in 2022, this mentorship, we didn't have any type of building business credit education at all. So a lot of us, we didn't know. So I've been kind of trying to help people. We don't fix personal credit, but we can help you build business credit, so that way it'll stop to separate your personal with your business, and be able to get those high lines of credit.
Yeah, because obviously when it bleeds to your personal life if you don't have it, which I found out.
And if you don't catch it fast enough, and that's the thing a lot of times that I've noticed with fix and flip investors.
Yes.
They're so caught up, like me, with the 2 months between the two, and you got to keep kind of going and going. You can't really stop. And so if you don't do that homework beforehand and get that set up, okay, but look for lenders that are no doc lenders that do soft pulls, because they're out there. And if you keep pulling the hard inquiries on your personal credit, it's really going to damage it. Yeah.
You're right. So from here, we talked about the different. You said when I think most of us understand now, and at least getting to understand. So what would be the initial steps if somebody needs to start? What would you say, since you're in the business and you own one? What would be the initial step to start building that business credit?
So we do a whole fundability check. We make sure your business is set up, your LLC has a good name. You don't want to have real estate investor or any type of lending, banking, credit, anything like that in your name. You want that good code for your business. You don't want to have, again, real estate investor or anything like that. You need to have a business email, a business website, a business phone number that's registered with 411. I know a lot of investors, when they're first starting out, they use their cell phone numbers, but you really want to think of it as, okay, I'm starting all over again, right? And so now I have to build this business profile. So I really need to look like a business. So a lot of lenders out there, they look you up. They'll check into it. And especially with a lot of, issues out there with fake businesses, they really check to make sure you look like a true business before they approve you for anything. So you just really want to make sure all that stuff is set up. You want to get it done in Bradstreet. Sign up with Dun & Bradstreet. That's big, because with the personal is TransUnion, Experian, and Equifax. But with the business, it's Dun & Bradstreet, Experian, and Equifax. And so you do want to make sure you get a good foundation, get all those things started.
Okay. Do you have any question, Caroline, in this?
Yeah, well, so with the Dun & Bradstreet, let's say a person is just getting started. What would they do with those credit scoring companies? Do you reach out to Dun & Bradstreet, or how do you start including, or does the bank? Yeah, talk about that step.
So We have a step-by-step. It's a portal. So once you sign up, you
Okay.
go in there every day. You set up all the things. It's basically 7 steps. So in step 1, you get your whole fundability, get your email and all that stuff. And once you get that green light that you're okay, now you look like a true business. Let's start doing the things. In the portal, it's all buttons. So you just click on a button. It sends you to Dun & Bradstreet. You sign up. It's free. You don't need to sign up for Dun & Bradstreet because they do charge you, but you don't need to sign up for their services. And then once you get that taken care of, and now there's also the 3 reporting agencies in there. So if you have a good credit score, you can start to get hybrid 0% interest credit cards. We do offer hybrid cards. As long as you have a 680 credit score and have like a couple of credit cards with some good limits, you can get 0% interest credit cards right away. And you'll see it right in the portal because it'll say matched. So you'll know exactly what you qualify for and what you don't. And if you don't qualify, you won't see that green match. You can click on it and it'll tell you what you need to do to qualify for it. So you can kind of work towards getting there, getting those approvals. But if you kind of have an ish credit score, you can still build credit in your business. You just should start with like the trade lines, the gas cards, the store cards, those types of things. The thing with business reporting or companies, they have no guidelines that they have to follow, like personal. They don't have to report to your business, to the reporting agencies for your business. There are certain companies that will. There's usually a minimum, like a gas card. You have to spend like $50 a month for them to report.
Oh.
So I always suggest the gas cards because we're always, going to an event or looking at a house or whatever. And so we're all going to need the gas. You're not like spending, $100 on paper clips that you're probably never going to use. But, you use the gas card, you pay it. And then it reports. At least $50, it'll report. Use it again, it'll start building that profile for you. And then you can move up to the more of like the store cards, right? It's kind of like, you're 18 again and you're trying to build that personal credit score, and you just keep going. And then you can apply for lines of credit. Once you get those lines of credit, there you go. You have the 0% interest credit cards. There's companies. We have a company that we can help you liquidate those cards. There's also Melio or Plastique, where they're like the vendor if you have a fix and flip and you need to pay your contractor.
That's easy. That's
Yeah,
awesome.
you can send a check. I've actually been on the other side of that. So I helped an investor out. She needed custom radiator covers, and I built them for her, and she was kind of running low on funds. Her contract was slow.
Like
And
everybody else.
said, I wonder, she had an American Express, and she said, I wonder if I can, just pay you with my credit card. And so we went through Melio. It was a vendor. I had a company that she set up the invoice, and they sent me a check through American Express. So I was able to get paid that way. So that's another like little trick. If you're low on funds and you do have that card, it doesn't affect your credit score because, this is a business card.
Interesting.
And then, you just pay it and you'll get more.
Yes. So talking about that, because I know about the credit score and the personal credit. So is business credit have score too? Or do they have score? Because I have no idea.
Yeah.
They do have. So what's the difference? How they look at how is those scores are different?
It's not much different. You'll see, and that's also in the portal. So once you start to, like Credit Karma has a different a score. Of course, because I was trying to, after the fix and flips fix my credit. So now I'm like obsessed with Credit Karma. I'm like staring at the number every day. Is it going up? Is it going up?
Oh
And
my
so
God.
that's the same thing with the portal. You know, as you start to sign up for those trade lines or different cards, you'll start to see the lever go up, and you'll see what you qualify more for. But the credit score is what, 800, I believe, is the highest
Oh, on a business, you mean?
in a business. Yeah.
I think in personal it can go to 850 or something.
Yeah, I
Like
think credit score personal is a little higher. But yeah, you start very low. I had a client, she started with an 80 credit score.
wow. I didn't know if it exists, or maybe there is a zero when you start zero. I
Yeah.
don't even know
Well, it's
how.
the Paydex. There's so few. There's a Paydex score that
Okay.
goes up to 100, and so that started at 80,
Oh, wow.
and then she got to 85. But she got $200,000 a line of credit.
That's nice.
Yeah, in her business name. So, and the nice thing about doing that is, you know, not to say that, I mean, a lot of companies, there is a personal guarantee, but there are some that are for your business only. So we don't want our business to go under, but it's always nice to know that it's not going to affect our personal life, right?
Hmm. So you said personal guarantee. So can you talk a little bit about it? What does that mean?
So some loans, some credit cards, when you're first starting, that's what happens is you're using your social to personally guarantee that credit card.
Okay.
And that's what happened to me. I didn't build that credit profile. And
Hmm.
so I had to use my social. I didn't know the difference. I just know I needed it. And so, you know,
Gotcha.
I used it. Once I maxed it out, that's when I started to see it. But what we do at Ground Up is we really kind of work to keep your personal life out of your business.
Okay.
And so it doesn't affect. And you can qualify for much higher amounts once you do. And
Oh,
most people don't realize how much money they even have
mm-hmm.
available to them for
Wow.
their business.
Yeah, it's a shame. Go ahead, Caroline. I see you.
Well, yeah, I was just going to ask. So, do you help people find, like, counsel with people about just, yeah, they are going to purchase a property that they're going to fix and flip, for example, or maybe do you also do for long-term holding? Let's say they're going to buy a rental property.
Mm-hmm.
Yep, we have DSCR loans.
Mm-hmm.
We have ground up construction loans. So if they do plan to buy and hold it, there's, you know, you can qualify for no doc, soft pull loans. There's fix and flip loans. There's all different types of loans. We even do 401k investing.
Mm-hmm.
So if you have an old 401k you're not contributing to anymore, you can start using that.
So because I know a little bit on that, we learned that, and of course we used our 401k. You need to move it to custodian. So you a custodian too. You put the money. How are you using the 401k? Or
So
people
I
have.
don't have a 401k, so I don't really know 100% all the ins and outs.
Okay.
So we have an advisory team and finance team that will walk you through the entire process. Depends on how you want to use your 401k.
Mm-hmm.
Checkbook versus no checkbook.
Yeah. No,
And
I
I would
understand that.
suggest talking to your accountant first to
Mhm.
see what's the best way to go if you're going to be active or passive.
Right.
What's the best strategy?
Yes, because I know I have a small Roth that it's a checkbook.
Mm-hmm.
So I took it out, and then it says in custodian. It's actually in a custodian. It's a check account in knowing those big. I don't really like the big the big banks. I like the union, the credit
The
union.
credit
So
unions.
I can write actually a check. I can actually use a credit card too to move money if I want to. So
Mhm.
I'm familiar with that. So yeah, that's awesome. So
Yeah, tell us a little bit about, because you said you had a website and working with you. How do people find you? And what if they don't have a great personal credit score? Is that going to affect their business credit and things like that?
Yeah.
So we do work with people. I mean, of course, it's going to be easier if you have a good personal credit score, but you can work on building that. And most of the time, if they have a low personal credit score, it's because they're using it in their business.
Yeah.
So,
Right.
so you're better off signing up, getting that business profile started, transferring over any, business stuff that you have in your personal name, transfer it over into your business.
Oh, okay.
And
Okay.
now, that will help your personal score. So if you have if you have
When
less,
you say bad, what would you say is like, what's the high point of bad?
so, I mean, the whole goal is to separate your business from your personal, right? So even if you have terrible credit on your personal side, you can still build. It's going to take a lot longer, but you can still build that credit in your business. So you start with those trade lines. It may take you more trade lines and more time, because now you have to show in your business a really good track record of paying your bills on time.
Is that usually years, or is it months? Like what do you see as kind of a minimum of, let's say you decide to start with a gas card, since everyone has a car and they're driving, that would be a fairly easy entry point, right? So are you looking at least a year of having that card and paying that off monthly?
So what's nice is I don't have access to your personal information, but I have access. I can look to see if you're active in your portal and what you've applied for. And what I've noticed is people that go in there and do the things that they need to do on a daily or weekly basis, they're up and running in 3 months.
Okay.
They're up and running and getting like 200,000 to start with lines of credit.
Nice.
The ones that are more active in their business, not on the portal, checking in, they're waiting a month to sign up. They sign up, they're not using it, so you have nothing to report. That's going to take you much, much longer. So it just depends on how active you are. You get in there, like even if it's every other day or once a week, just get in there.
Yeah.
Do the things that you need to do. Make sure you spend some money on those cards. You have to spend some money, and think about like marketing, systems, CRMs, like everything costs something in your business.
Yeah.
So use that money, pay it back. I mean, you could even have people start to pay you. For me, I mean, it was easy because I have the business. So I have the third party invoicing people. And so when they pay, that helps me build my credit. But for like active flippers or, renters, if you send a bill, right, and the rental income is coming in, that's helping you build your business credit as well. So just trying to get those types of things coming in and out of your business, making sure they're on time, really helps a lot. If you're just starting out, yes, it's going to take you a little longer. You're going to be spending a lot of money in the front, but make sure it's good money spent, marketing, lead gen, and like all those types of things for real estate to really make it worth spending your money. But
yeah, well, you're focusing on income producing activities is what you're saying, because that's what you want to be showing is income coming into your business and moving through.
Or even if you don't have income coming into your business, say you're fresh out of the gate, you're just starting, you have a brand new LLC, start now.
Yeah.
Because once you get busy, you're not doing it. So do it in the beginning, build that credit profile. And even if you don't have money coming in, spend that money. on marketing and those types of things, pay your bill, because all they want to see is that you're able to pay those bills.
You're an on time.
Yeah,
That's
right.
worth investing in you, because you're showing that you're doing the things that they're looking for, which is
Right.
using the lines of credit, paying the monthly payment on a timely manner, and those are principles, whether it's personal or business.
Right.
So,
And even if you have less than stellar personal credit, you can say, hey, I know I had some things going on in my personal life. My personal credit's not the greatest, but here I am, building relationships with banks and lenders and showing them, a few months down the road, like, here's my profile. You can see all my 3 reports. I've been, paying my bills on time. And so that does help.
Fantastic.
Yeah.
So tell us a little bit about just getting started with your business. If a person was going to decide to work with your business, where would they go, and what maybe is a person looking at? Are they paying a monthly fee? Is it an upfront cost and then monthly? Tell us a little bit more about that.
So we're Ground Up Solutions. So if you go to www.groundup-solutions.com, you'll find us. There's a few different options. It's $34.97 for the portal. It's lifetime access to all the funding that you could ever want. As you grow, you'll qualify for more. It's lifetime access. You'll have all 3 reporting agencies in there, so you'll be able to check your scores. We also have another option. A lot of new business owners, they want that monthly payment. So if you put $9.97 down, it's $2.97 for the next 10 months.
Gotcha. So wow, that's awesome, because I think if everybody started there, I think they had. I know from my experience. Again, I don't know where we went wrong, but that really hurt us when we did the fix and flip, that we didn't have our credit. But that's awesome. But I would like to pivot just a little bit, because I know you are as well a capital raiser, and you're helping businesses to secure funding. And so tell me a little bit that side of your business, and what the entrepreneur look for in private money lenders, what you guys do. I know you have others, but you are basically, it's private money. It's not a hard money, right?
It's private money. Yeah. So I, very early, it was before I purchased my fix and flip. I did become a certified private money lender. So I went out and I searched all different lenders to build those relationships to work with. And so when I started helping people build business credit, they were getting all this money and they were like, okay, what do I do with it now? And so they didn't have an opportunity, but they wanted to at least make that money work for them.
Yeah.
And so I tried to do the wholesale thing. I just could not do it. I am not that person. And so I started just through network, meeting a lot of wholesalers. And then I started learning about EMD, transitional lending. I took that, my partner took that course. So we were doing that. We were always in the lending space.
Okay.
And the one thing that I always found when I was doing those flips was finding the money. It was the easiest part.
Wow.
And if I could just get the right contract, I would have been all set. But
you can't have it all. It's right.
I do now. I know I have some really good contractors now through Subto, meeting people. But so yeah, I kind of always stayed in that space. And so I would start to get people sending deals to me. And so when these clients were like, okay, I have this money, I said, well, I have this opportunity. If, you'd like me to connect the 2 of you together, you guys can maybe JV. Because I had one thing that I always loved about my women's network when I first joined was that they were very connected with each other, and very supportive. And being able to JV is so much better than doing it alone.
Absolutely. All
Um,
day, every day.
and
I know.
so I would always try to like put people together, and things were going great that way. And then I joined Subto, and then I realized that that's a thing.
Yes, I know.
And it's called being
That's,
a connector. And I was like, okay, I've been doing this now for some
I need
time.
to
So this is great.
monetize on it. Yeah.
Yeah. And so I actually joined Subto because I wanted to be a capital raiser. I wanted to learn how to structure that, because I knew about fund of funds. I heard about syndication. And so I was like, what is the difference between all these different things? And so when I joined Subto, I quickly joined a bunch of other groups that were in there and just making great connections with people. I learned the difference of what a fund to fund was, and what a syndication was, and what a good JV partnership connector was. And so I started doing that a lot with my clients,
Awesome.
as they were qualifying 0% interest credit card, or, lines of credit, or the 401k investing. What do I do with it? Here, we have this. And so we started structuring those things. But soon I will be starting a fund very shortly. My partner and I, we're working on just kind of getting through the loans that we do have that we're looking for funds for. We have about 7 of them. One of them is your friend, a few of your friends. And once we close those up, we're gonna move forward and go for the fund. We want to raise millions for other investors. And hopefully we are going to be, a lot of us are going to be investors in that pool. So
yes, but that's what's neat, because you see when you do fund raising funds, you are in the deal.
Yes.
You get the deal first, and you can say, okay, wow, I can be part of this deal. And and that's, people like it when they know that you actually part of the deal, and you getting them in, and they feel more comfortable when you have a relationship. It really helps.
And it's nice though for those investors that may have only 10,000 or
right.
15, 20,000. I have
to work.
had paired up an investor who has 10,000 with another investor who had a little bit more, and the two of them together JV'd to be a private money lender on one of the properties that I had. And so it was really a win-win for a lot of people. The owner was able to sell her property. The realtor had gotten paid. The contractors are now working. The attorneys got the paperwork together. Private money lenders are making some money, and the investors making some money. So it's like such a great feeling to have all these people working together to make it happen. That's like the best part for me.
No, I totally, I'm such a people person that when I see things good like that happen, it makes my heart like,
it really does. Yeah.
There's something good out there, because, I'm sure we all been in business partnership that would not worked out very well. And it's like, oh gosh, I hope that's not going to be like this all the time.
Yeah. Yeah. And when you have more people and you have those, general partner or limited partners, it does take the stress out of it a little bit, and you have people like us who are kind of in the middle of just, keeping track of the project and updating the people that need to be updated, and the investor can just worry about the big
day-to-day,
right?
Operation. Yeah. Absolutely, I agree with
that.
I
love seeing the photos too. So
oh yeah, it's always nice.
I would say that's the fun of just being in the real estate industry. It's there when done correctly, and also it is a community of all the people and all the parts that work together to make that a success. And then in the end, having this property to present to either improving the neighborhood or better renters, for better rental income, for just
homeowners,
family,
just the win-win
so
that results from that. But that's, I think, a real challenge for so many investors is, who do we work with? Whom can we trust?
There you go.
We've all had the bad scenarios enough to know that it really is not easy to find those people that we want to continue doing business with. And so that's why it just starting with you. And sometimes people just don't know the starting place of where that safe place is to have the right information to take the necessary steps to condense that learning curve, especially if, well, on both sides of it, those who are young and just getting started can be so starry-eyed versus those who have had the school of hard knocks that they're very cautious, but yet wanting and knowing that that's a space that they want to get into. So it's fun to just hear the successes that you're having and the people that you're working with and seeing how it's working. It's working with the right communities coming together.
That's what it is, the communities. And I feel like when I had my first fix and flip, I was so grateful for the people that was in my life that helped me through it, because you can only max out your credit card so much. I ran out of money on the first one. I was very fortunate. I looked for the best realtor because it was taking longer. I was like, I need the best realtor to like sell this house day one. And so I was very fortunate. He was also an investor. And so he had his own people. And I said, we need to just sell this house. Like, it's fine. Whatever it looks like right now, like, let's just get rid of it. And he's like, nope, we're going to finish this. We're going to bring it to the finish line. And he paid his electrician, his plumber, and his sheetrock guy. He paid for them to finish.
Wow. Yeah, I remember
it was beautiful.
It really is.
And having the right, say that each fix and flip is a new job interview for who you want to keep and who you're never going to have back again.
Yes.
You get the right people together, because even if they say they're really good at sheetrock, and then you think, oh, well, I'll ask him to do this thing. And they say yes, but they're terrible at it, but like tile or something. It's just, it takes a bit to put that the right people together that you can count on to deliver each time in that space of what's being needed next. So are you still doing fix and flips, or have you transitioned to, what's your focus now in your investing portfolio?
So right now, I had sold my properties less than a year ago. It hasn't been quite a year. And so I've really just been focusing on raising capital and helping people build business credit and sharpening those skills and going more with the raising capital side of it. And so I really want to keep sharpening my skills and keep my focus there. Keep networking, meeting new people, helping new people, and building that foundation. And then I don't want to do fix and flips. I do have 2 other partners. We have a company. We're doing direct to agent outreach. He is a closer. He's in Subto. And so he's doing that part because I don't want to, and I just can't. And I'm going to be the capital raiser. So we are starting to acquire more properties, because that was really what I wanted to do when I first started, right? I wanted to build that generational wealth for my family, and my son and my granddaughter. And so I'm getting back into doing that eventually.
That's awesome.
That's great, because everyone has their, Garrett Gunderson called it as your investor DNA. And all elements are equally important in that your skill set in the funding and finding the investors and putting the venture capitalists together, because I know once we started doing fix and flips, people were coming out of the woodwork saying, oh, looks like you're doing this. We have money. We really want to we need a place to put it. Let's we looks like we can trust you, kind of thing.
Yeah.
And then you need to find the deal. You've got to find the right people to work on the deal, and you've got to get the people who can put the deal together. There's just so many different elements.
Yeah, many moving parts. Yeah,
many moving parts, and it's great to find where you feel your niche is.
Your strength.
The cog in the whole process there. But I think going back to where we started with the business credit and the personal credit is for those beginning investors, really understanding how powerful it is to have those separated.
Yeah,
definitely. From that point. Yeah.
So
I'm a numbers and a spreadsheet girl. So
that's awesome.
I knew that would come back around eventually in my life. But yeah, I love that side of it. And so why not work with people who are good at other things that I am not good at, and that is what makes a great team.
Yeah. Yes. But there are people who really don't want to be in the numbers. Right. They want to just be out finding the deals.
Yes.
Be out with the people talking and selling in that regard.
Mm-hmm. Right. You need to read the book of The One Thing, because really everybody should really hone and get good in one thing, and then get everybody else to do some different things.
Yeah. And I think too that it's understanding the individual elements as well. Like that's important to understand the necessity of these different parts. And then, like you said, then you find your space within that you want to really excel. And because that's a service to other people. Like you said, not everybody's a numbers person, but it's essential.
Oh my gosh. It's all in the numbers. Gosh. So as we it's awesome. I love, and I hope everybody's listened or listening in the future, that they can, I will put your information, that can reach out to you, even for funding. I know I was looking for funding, because this is one thing that everybody is looking for, money. So it's awesome to have people like you that building those funds, and, connecting us all to what we need for our business. But so in closing, if you just can, I was thinking about if you can tell us why it's in your mind, and I think we touched already in it, why is it so important to build that, to get more funding, that business credit, to have more funding over and over and over, because you will run out of money eventually. So some of the strategy they can do to always keep that going. So
well, I tell people, you could always pay somebody 15% interest, right? Or you can get a 0% interest credit card and now pay yourself. And so I always try to squeeze all the information and go all different routes. And initially it's, do you have a 401k that you're not using? No. Okay. What is your credit score? Is at least a 680? Perfect. Let's get you some 0% interest credit cards. You're doing a fix and flip. Awesome. Let's get a no doc soft pull lender that will give you 80%. Do you have any experience? No. Okay. Well, do you have a JV partner that you can partner with? Maybe sponsor a loan, right, to get that experience. Or, me, I've done a few fix and flips. Get that good 80%, 100% rehab, and now use, that money that you have built in your business for the down payment. And now you're saving money because you're not paying all that interest.
Yeah. Yes.
And so, and to build from that, and just keep building. The more you do, the more money you're going to get. And the more times we can use the bank's money instead of our own pocket money.
Yeah, we know that. Caroline, in our field, in life insurance and compound interest, loans and building it, and it's not only for now, it's forever, which is amazing. So my
business partner does that as well, and she loves it. She has 3 or 4 different ways of getting that monthly income in. Infinite banking concept,
Yeah.
I think she does. I think she dabbles in oil. She's a passive investor for some of our fix and flips that we have.
Yeah. Awesome.
So yeah.
So many ways. So many ways.
Yes.
Really, this real estate umbrella is so big. You just have to find where you're comfortable with, what you like doing, and grow from there. And you can always try different things. You don't have to be stuck in the same place. So
yeah, I think there's just so much out there that it's very easy to get that, squirrel syndrome, just here, there, and everywhere. Yeah.
Well, I find that I just tell people it's like anything. Just get your foot in the door.
Yeah.
And don't think that you have to learn everything at once. Don't be in a rush, and just start your learning, or like with you, start building that business credit, and you'll be interested to see how a door will open here that'll lead you in this direction. And like for you, and also Miri and I doing the fix and flips, you're like, okay, I learned a lot from that. I don't think that's my niche. For other people, that really is their niche. One of my boys finally said to me, "Mom, you're never home," because you always had your property with something to do with that rehab. But I gained experience, and through that, you just have to find where that door is going to open for you in that first step. But don't be afraid. For all of us, it's been a huge learning curve, and realize the more we learn, the more there is to learn. As you've shared your story with us, that you're not where you once were, but you continue to learn and continue to strategize and find where your strengths lie. And I think the big part of the takeaway is just start somewhere.
Yes.
You're right. That's awesome. 100%. Well, I guess any last words you have to say to us, Dawn, before we go into part today? That you would
just keep going. Real estate, there's so much involved. Pick what, like you had said, Caroline, what you're good at and stick with it. Reach out to people who know a lot of things of where you want to go. If it's going to help you get where you need to be, JV with those people. You don't have to learn it all.
Yeah. Yeah.
Right. Yeah. Well, that's awesome. Well, ladies, I think we are almost on the top of the hour. It was wonderful having you here, Dawn, learning and learning about what you're doing and all your experiences. And thank you, obviously.
Thank you so much. It was so nice to meet you, Caroline.
Yes, it was great to meet you.
Talking with you, ladies. Yeah.
Yes. Well, you guys have a fabulous day.
Yes.
And
until the next time.
All right.
And we'll talk soon. Have a great day.
Enjoy the rest of your day. Bye-bye.
Bye.